Step one, a lot of people said I've already done it. But I'm going to say again, as you go through this 8-week period, when you get close to the end of the 8 week, then we have to be able to make sure we put the right information.
So we want to bring you the 4 important steps in order to maximize your debt forgiveness on PPP. And these 4 steps include the loan application, spending the money right, applying for loan forgiveness, and the tax implications. But the problem is a lot of people have either already applied or they're too scared to apply. So we think step 1, which is the loan application, is really important right now because you want to make sure that you actually did your loan right, your loan application right, if you've already applied. And if you haven't applied, we want to make sure you understand what you're going to do when you do apply and what to expect and if you do qualify for it. Right.
And I think the other thing is I'm seeing a lot of people afraid to spend. So they actually applied right out of the gate. This was a rush job. So, and just a little background, why all of a sudden are we doing the 4 steps? It's because if you rushed out and got the money right up front, then we're right where this red marker is is where we're at. Yesterday in my office, I had 3 people in yesterday, and 2 of the 3, either this weekend or the first part of the week, they're through their 8-week period.
So they've already had to spend most of their money and they're getting ready to apply for forgiveness.
And it's too late if they don't. Mm-hmm. So we're doing these engagements. When I go through this, step 1 was actually the easy part. You got your payroll. They figured out your monthly payroll out of 19, and you got 2.5 times that. That seemed very straightforward. And in a minute, when we deep dive step 1, we're going to look. I think we need to look at some live scenarios. So this whole 4-step process is live experience. It's the real world. We have had input. Matter of fact, I've had one banker. I think he's got me on the speed dial now, and I've never met the guy, but he goes, "You can give me more information than I know because that bank says we've never worked with SBA. Mm-hmm. These definitions we don't know." So, what we want to look at, what went on that loan application in step 1, and it's still not too late to apply. But what went on that loan application in step 1, we're finding may have impacted step 2 on spending and step 3 on debt forgiveness.
So if you didn't apply right, does that mean that might affect what you're actually forgiven for?
Yes, I think that's very good, Laura. Is that, let's just do a real world scenario. In these presentations, I always change the names. I always change the numbers.
You can't figure out who we're talking about.
Can't figure out who you're talking about. I got to protect,
right?
But we're literally right now. Debbie and I yesterday worked all day on nothing but helping clients out to get through this confusion. The other big reason why we're doing the 4-step now is because we finally, right here in step 3, we finally got an application for the forgiveness of the debt. So I think the takeaway overall, so we can get back into step 1, is it was a rush. Mm-hmm. We're finding errors in the application.
Is there any way if you've already done the application 8 weeks ago, is there any way to amend it if you figured out, I did something wrong, I need to make it right, or it's too late?
Well, John, actually, we knew from day 1 that you only got one shot at this and what the right shot of it was. Mm-hmm. And to give you some of the experience, and we're going to go back to step 1, so I'm going to kind of lay this marker here, but throughout this presentation and the following other 3, because this will be a 4-part video, 4 steps, we're going to continually say, well, we get to step 2, what was in 1? We get to step 3, what was in 2? What was in 1? So, but back to what happened. Yesterday I had somebody, again, changing the names and stuff. They're right here. And today we're talking about step 1. Mm-hmm. But they rushed. They went to a bank. We provided the bank the payroll. We provided the bank the Schedule C. It was a sole proprietor. And so the Paycheck Protection, and I think that was the big thing. So many times that self-employed person thought Paycheck Protection. They were thinking payroll protection.
Right, they're employees. If they didn't have any employees, it would still apply to them.
Right.
They still get a paycheck.
So there's a lot of people out there still have not applied that are qualified.
Right.
That truck driver that gets a 1099, the real estate agent that gets a 1099, the consultant that files that Schedule C, and none of them have employees, they still qualify. And so I think that it's not too late to do that. But yesterday, we're going through they're like, we want to know how much more we have to spend. So in our consulting packages, we're looking at step 2. We're saying to our clients, and I think this is a good process for you out there, if you're that small business or that tax professional, is to keep track of your numbers, accumulate them, put it in a separate bank account, whatever. But the thing about it is some of what they thought was deductible wasn't deductible. They thought the complete mortgage was deductible. It's only the interest. They thought all payroll-related expense. No, and so definitions, we're going to cover that in step 3 in this presentation. But back here, the interesting note, I said, how much was your loan? And they gave me the number. I took wages off the Schedule C, divided it by 12 times 2.5, and came up to the exact dollar of the loan. What was missing? They had $100,000. Again, changing the numbers, but they had let's say $100,000 Schedule C bottom line. They didn't get 1/12, which is 1 month of that amount of money, times 2.5. So it figures out that they should have got approximately $17,000 more dollars in their PPP loan. So dispersing those checks in this 8-week period to the self-employed person is right. But because it wasn't included back here in the application and you can't reapply, guess what? Qualified expense in step 2, but you didn't get the money in step 1. That wasn't maximizing the debt forgiveness. The other thing I want to say is most banks, and again, if I haven't mentioned it, I know we're keeping track of consulting jobs we're doing. We're keeping track of banks. And as of yesterday, before getting ready for this presentation, we're working with over a dozen banks, small banks, large banks. I've got a client in Florida that I'm working a bank there, but not all banks' definitions are the same. That person said, the banker said, we've got to hurry up, back to this rush. We got to hurry up and get the money. And they did run out. It ran out very quickly. A lot of people didn't get money. But what we're finding, some people didn't get the right money. So again, step 1, it's not too late. If you are going to apply, get some help. For example, we're getting questions on as far as do I qualify? Was that self-employed person with no wages? That Schedule C or that Schedule F? Farmers were kind of missed. They were added. But the other thing we're looking at is this question on, I haven't filed my return yet. The thing we're running into there, it doesn't say that you haven't filed your return. You could get a loan back here in step 1. You could get a loan based on a financial statement for 2019. Now, because we're here again, we're going to be able today and through this the 4-step series to give you so much more information than we could even a week ago. SBA's put out the application. They've updated some of the definitions. They've added more Q&A. So we're trying to be your melting pot, to comply and to make sure we're correct. So what happens is that when we get to step 3, at that point in time, and I'm going to go back to within the last week or so, these different banks are giving us document requests to do the forgiveness application. They're not asking the same questions. Some of them are asking for copies of the 2019 return. One bank says you have to have the 2019 return completed. Other banks aren't even asking for it. So that's part of this confusion, is because remember, this application has been reviewed and determined by the bank, not SBA.
Right.
So what I am telling clients, so let's go back to this right here to show you how these are so interrelated, is that if we go back to these people I was meeting with yesterday, they're going through their 8-week period. So that timeline, they're right there. We want to make sure we spend the rules, the 8-week spending. And we'll cover those rules in step 2. But the important thing was that whenever we're right here, we want to make sure to get the right money spent. So what I'm doing here yesterday, 3 out of 3, they did not have a copy of the loan application from step 1. And I'm saying without that loan, they got a signed document. They've got a signed document. But what happens is, and I'll give you another war story from yesterday. And that was in one of them, the app was filed with 4 FTEs. That's employees, full-time equivalent. And in that case, the 941s, the quarterly payroll reports showed 6 names, but 4 of them were full-time, 2 of them were part-time, and 1 of them worked less than 40 hours. It was just a temp. Here's what happens. Whenever I take the payroll and add up the 4 full-time, that's what the loan was based on. But in this application over here, again, they have 6. So now it's like, wait a minute, we can't reapply. So how do we get this? Is because the bank sent out the preliminary on the application saying, here's what we have. We have this many employees and this loan amount. They gave us that information, which was determined back here in step 1. That's how I keep jumping. I apologize for jumping back and forth, but this is so integrated. And again, we're out here 2 months into this process, and we're getting definitions and applications and
after the fact.
After the fact. So we're for these people here, the game is over.
Yeah.
We don't even know the rules.
They wish they would have had the information when they're applying, not now whenever they're getting ready to be done.
If you've already applied, you're just about, there's nothing you could do about it. You're past 1, you're at end of 2, now you're at step 3.
Right.
No matter what.
Step 1. Once you applied and got your money,
right,
that's the maximum forgiveness you can get.
Right. It's over.
So in step 2, we got to spend that amount correctly, then apply for it. And we actually have to request of the bank. It's an application. It's a request to the bank for the debt forgiveness. But going back here is now, what did we do with that? We've got, when we run up the payroll numbers, it only includes full-time employees, not the 2 temps. But when we look at the number, it includes the 2 temps. So we've now sent an email and a phone call to the bank saying, can you help us? Because remember, we're over in step 3 asking for the forgiveness of debt to the bank. I guess the big takeaway for me this week in meeting with clients all week is most of these clients are getting ready for their 8 week to be over. And we're having these questions pop up after it's like an 8-inning ball game. These people are in inning 8. Sorry, baseball's 9 weeks, but this for right now with baseball shut down, our baseball game today is 8 innings.
Well, we keep saying there's no time machine to get in, go back and do it all over again. It is what it is at this point.
They needed these questions before they applied, not after they're already spending the money.
But I think we also have to give credit to the fact they were trying to get the money there.
Mm-hmm. Right. Yeah, because people
and so
keep doors open.
Yeah. So some is better than none at all.
Mm-hmm.
So go on.
Can we readdress? So you said that it's 2.5 times of your payroll from 2019, correct? Is that how that you figure it up? So what if it's a Schedule C that has employees? So the business owner does not get a payroll check since they're Schedule C. How would they figure themselves into that?
What would happen there is in step 1, they would look at the payroll, determine that, and then the actual SBA, after some time, came out with, you look for the self-employed, you look, for example, a Schedule C, you look at line 31. It actually says look at line 31 in the interim rules. So if you had somebody that had, in that case, you divide that by 12, multiply that times 2.5, as the same as you would with the payroll. And this person, it was a fact, they didn't pick up line 31 because it was new to them. And so that's why I'm saying we're getting a lot of inconsistency. And, if that client had been at the feed store or that client had been at the country club wherever, and said to their friend, "Oh, I got my PPP loan." "Oh, you did? How? What'd you get?" "Well, I got it on my employees." And then, that's me and Laura. You go, "Well, I got my employees, and I got also 2.5 months of my 19 income off my Schedule C." At that point in time, we have two answers. One answer is more correct, but because the loan has been there, unless somebody makes some exception, SBA makes an exception, unless Congress makes an exception, we got to play by the rules of the game going through this 8-inning, 8-inning game. And so in that case, what happens is that you got 2.5 months of your self-employment income limited to $100,000. I got zero. Mm-hmm. And I think that's again why that it's so important to have come out of the gate correct.
So on line 31, I'm going to assume that's your net income on your Schedule C.
Yes, that's correct. Your net income, okay. Schedule C. That's what goes over to the self-employment schedule.
So if you're a business owner, you divide your net income, which is your income after expenses, you divide that by 12 and then times that by 2.5, and that's what you would be qualified for your forgivable loan, plus the 2.5 times your monthly payroll cost for your employees, correct?
Yeah, that's correct.
Okay.
And that's why I think there was a lot of people had this misnomer. I have no employees. I don't qualify.
Yeah. So then what would you do if you didn't have employees?
Well, if I didn't have employees, I would still provide to my bank my Schedule C or my K-1 on as for a partnership. I would provide that to them, and they would take my income divided by 12 for 19 times 2.5. And I think this discussion here, really we need to step back and say why. When this first happened, literally the first Friday you could get the loans dispersed, I was having a discussion with more than one bank, and what is the Paycheck Protection include? Well, I know a couple of banks included K-1s from S-corporations. That would be incorrect, because in S-corps, you're to pay a reasonable wage. So the theory behind this is to take care of earnings, whether it's by W-2 or self-employed. So let's go down the businesses. Huge confusion out of the gate. Matter of fact, there was actually loans made that included the percentage of the S corporation income. It should have only included the W-2 of the owner, because again, that's what was earned. The K-1 on an S corp is a return on an investment. So if you followed the law, the tax law, that's what they ended up applying it to, is that if I'm a sole proprietor, it's my Schedule C, my Schedule F. If I'm a partner or a partner LLC, it's my K-1. If I'm an S-corp, it's not my K-1, it's my W-2.
The way that I understand it really easy is that it's how you pay yourself. So in a Schedule C, you don't pay yourself income. You're not supposed to do that. So you just get the earnings that are left after your expenses, and that's your income. A partnership is the same way. You have to pay taxes on all of the money, all the net income that you have after expenses, to where an S-corp, a stakeholder would receive a W-2, like you said. Right. And so that's why it would be in payroll. But that's why I think that people aren't sure what happens to somebody that has a partnership or a Schedule C, because they don't get a W-2 and they think it's payroll. They don't see, they don't understand that there's that money there that you can receive.
Well, it's just like a C-corp there. The owner would have wages. Mm-hmm. So it's very consistent with old law. And I do a lot of speaking on tax law, and I'm very guilty of my focus over the years has been new tax law. And the thing I always look at, what was the law before the change? Well, the law was, and again, you did a good job of, what do I pay myself? Or what are we paying self-employment or FICA tax on? Mm-hmm. And that's earnings to be spent. So it was a paycheck protection, not a payroll.
Yeah.
Laura, I think the point of the Schedule C is that people most people go get their taxes done.
Right. They
So
don't do it
it's
themselves.
They don't know
it's a
what they
foreign
are.
language.
Here's my stuff. Here's my report back.
When if you understood it all, you'd do your own return. You know,
Yeah.
nobody expects
Yeah.
you to understand 100% of tax law.
Right. Well, and I think that's why that, again, here in the application step is get some help. And what I look at getting some help is the fact that you need to get, yesterday I got a call from an enrolled agent out of California with a question on it. I got a call from, a banker in North Missouri on it. So for the small business, whenever the bankers, the CPAs, the EAs, the accountants are talking back and forth, even we're 2 months into this, it is complicated. But the other thing, the rules keep changing. Definitions keep changing. And again, we don't want to have a, extremely long video here, but that's why over in step 3, we're going to talk definitions. And the reason why is because this week when we start doing, forgiveness application, filling them out for our client to give to the bank, one, we're going to be filling that out. But because we got definitions and more clarity through even the application, we've got more frequently asked questions, we're going to be able to do a really good recap. And I think, again, step 1, a lot of people said I've already done it. But I'm going to say again, please, as you go through this 8-week period, when you get close to the end of the 8-week, you really need a copy of that application.
Make sure you applied right.
Yeah. And then because for most people they've already applied, then we have to be able to make sure we put the right information, we spend the right. That, the gentleman yesterday, it didn't matter how much he paid himself because it wasn't qualified.
Yes.
But the other interesting note, I still had him to write a check. Write checks to himself. You know why?
In case.
I believe we can count his payroll against the 25%. I believe we may be able to count it against the 75%. So I said, do business as normal. And I think that's the whole thing. This isn't to say I got to spend this exact amount of money.
And for somebody who's self-employed or a partnership, don't write a payroll check to yourself.
Right.
Write
But we'd call it a draw,
Yeah.
or we would call it, it's non-deductible because that's what you pay your tax. Again, that's how you qualified for this, was paying taxes on those.
You pay all your payroll taxes and self-employment taxes on your tax return if you're a partnership or a sole proprietor. So don't try to write yourself a payroll check. So, and I think that's important to remember is that the self-employed person, the sole proprietor, the partnership, they receive their money from the net income of their business. And so the paycheck protection is protecting their paycheck. So their paycheck is that bottom line. They're not getting the payroll. And I think that's where the confusion comes from, is it's a paycheck protection.
Yeah, I think it's a great point. And again, I have no idea how many times I've had to explain that to, bankers, accountants, and small business.
Yeah, I just ran into somebody the other day and their accountant told them that they don't have employees and they haven't done their 2019 return, so don't worry about applying, which we know both of those points are wrong. So make sure that, people need to make sure that they know that they qualify. I want to go back to, you did have an example about having the right number of employees and the right money on your application. And without getting into the weeds of the full-time equivalency calculations, can you just explain real quick why that it's important to have the correct number of employees on your application?
Yeah, and real quick, your reference to the full-time employees, we're going to cover that. We're going to cover that here in section
In depth.
step 3 in depth. But the back to the number of employees, when you get ready to apply for the debt forgiveness, there's 2 major rules. I got this much money and I have to spend it this way. We will cover that in step 2. Then when we get to the end and go to the application, I made mention of, in the loan app, they had 4. Well, this client yesterday, whenever the bank sent out their application for debt forgiveness, they gave us a recap. And on it had 6. But when we looked at the 941 and we took the amount of the loan multiplied by 2.5, it was actually on 4 employees. So the wages off, and the client says, we talked to the bank and we only wanted to cover the 4 full-time because one of the part-timers was a few hours.
Yeah, and they were seasonal part-time.
So what happens is there they looked at the payroll reports and saw 6 names, and they put down 6. But if you look at the loan app, what happens is if you total up the 4 full-time people, it comes back to the dollar of the payroll for the 4, not including the 2 temps. Why that is so important is down here in step 3 is that if you left those numbers that way on the forgiveness application, it appears because in the 8-week period, they paid those same 4 people. Those 2 temp people wasn't even in this 8-week period. So when they got here, what happened, or what would have happened had we not been assisting, was the fact that the bank would have said, you've gone from 6 employees in step 1 to 4 employees in step 2. So now in step 3, we're going to possibly make you have to pay back no debt forgiveness. It's a loan because you reduced your payroll from 6 to 4. They never reduced any payroll. So the point of that is how a number on the application, and again, how we found out was they gave us the debt forgiveness app from the bank. They'd put 6 here when we've been paying 4 because 2 temps were gone. And the interesting note, the 2 temps were gone before April 1. So when the application was submitted, those people were no longer employed. So in this case, that's where we had to call the bank back and say, what are you going to do here? Mm-hmm. So we don't have a final answer, but I believe what the bank's going to do is correct it and sign off on it and say, here's a full payment. But had we not been reviewing this with the client in this period, this thing would have gone all the way in and the bank would have said, here's how much we will not forgive. And most small business people would say, I mean, my banker, I trust him. My banker's an expert in banking. So if I don't get it all, they must be right. Mm-hmm. No different than the discussion whenever the other client yesterday said that, well, the loan officer said, we got to hurry up and get our money. Let's put in what we know we can get. That's payroll, and didn't include that Schedule C self-employed income. And so there's an example of where the customer said, that's what the banker said.
And we want to make sure that like the bankers were under a lot of stress, a lot of stuff was happening, and they didn't even know all of the rules. They were trying to figure it out and learn as they went too. So there's going to be mistakes because of, we're all humans and things happen, but we're just hoping that if we catch them early, there will be some kind of.
Right. And I also believe we're right at this point. We're for the original rush, that first Friday application, we're at the end of the ball game. We're at the end of the 8 weeks, the 8 innings that we are supposed to spend it on qualified expenditures. What happens is we're getting ready to go into the application. And again, that's why I think this video, the 4 steps, is so timely.
Go to your accountant.
Go to your accountant. Now, and I'll be candid. Because
this is, I would think this is scary stuff.
Yeah.
Especially if you haven't applied and you see all the horror stories. On one hand, you could say where all the banks are going through all this. They've had 8 weeks to have their own questions. They've dealt with the small businesses, so like they've already gone through it. So now they have they have a better idea of the whole process. So it's even safer now than it was 8 weeks ago.
You're going to have a much better chance of getting the right number. And remember, getting the right number here can be, you could get too much. For example, if you got a loan based on, s-corp, there was a point in time on TV whenever they were talking about all these companies paying back the loan money. A lot of those was loans made to S corporations based on their income that wouldn't have qualified. So there was actually, on TV, this company's paying back, this company's paying back. Well, the problem with it was the loans were made with a wrong interpretation of a word. Okay. And that was that flow through that K1 on S-corps. So some of the banks that did that immediately sent out letters. If you pay this back before this date in May, and that date moved, it was approximately around May 14th, then it was not a loan and all bets were off. But the TV covered it. Well, they just volunteered to pay it back. But there was it was a clarification of the law, and said these loans should have never been made. A correction. And in that case, we went through all of our people we're working with, and we had a couple that we said, hey, you've got money, don't spend it. Spend it on actual expenses, but don't believe it's going to be debt forgiveness. So I know of at least 2 entities that received money from banks and came back a couple of weeks later and says, no, that was off of an s-corp K1, not off the s-corp W-2. They did the W-2 and that. So there's where they got too much money. But then the guy that came in yesterday that they didn't include the Schedule C, he got too little money. So John, as you say, this is very scary, because the other thing you have, which is unusual, you have SBA and banks through the banks. SBA is dispersing all these funds. But in the end, like the forgiveness, all of a sudden the law said it's forgiven. But how many times do we keep going back to the accounting? What's your payroll? What's your Schedule C, line 31? When we get over here to step 4 in the end, we're going to be looking at tax impact. How does it affect me? So I think, again, I like this kind of spreadsheet where we can jump from here to here. And as we go through these other steps, we're going to say, here's this, but what happened here? Step 2, that payroll yesterday, they're writing the checks out to the owner, but it doesn't qualify. He won't be getting the forgiveness on that, because in step 1, it was not loaned to him. Because remember, the forgiveness, which is the gold here, you can only be forgiven up to the amount of the loan. His loan was short in this loan application by his payroll, or by his earnings, not because he had no W-2. So confusing for the pros. So for the small business, wow.
Step 2 is definitely going to be pretty big, I think. Spending it right. Maybe they're in the 8 weeks right now.
Yep.
Or just started. They haven't started yet. I was just reading that there's lots of businesses that wanted to wait out the first round because they just didn't. It just felt too scary. There wasn't enough information. I was just reading an article right now. They're like, we're going to wait, see what happens, and then apply after the first round. And we know if are we really going to get our money? Is this really going to work out?
See what happens to everybody else.
Yeah.
Well, and to show you how complex this is that when we did the video where we had this whiteboard up there and we had the 4 areas. We had the ERC, the employee retention credit. We had the sick leave, paid leave, COVID-19, the Family Leave Act. Right. Then we had the PPP, and then we had the emergency funds up to $10,000. Right. Well, what happened was everybody rushed. Let's talk about rush. Everybody rushed to get this loan because the money was going to be spent. We're actually now here, and I'm glad you said that, John, because here, the third person we saw yesterday, now realize in the last week, I've probably seen 18, 20 appointments on people right here. So one of the big takeaways, and this would still apply to right now, and I just now thought of it, but if I'm looking at getting a PPP loan now, for some clients we had, they came to us and we said, which is best for you, an employee retention credit or a PPP loan, because you can't do both. And so we actually, one of these new clients right here, a new client yesterday, we were not part of back here, but here yesterday, it was a restaurant. They were running on pickup. So they were running, whenever we looked at their payroll for this 8-week period to what was turned in on the application, they're running about a 30-35% of payroll. They're running about 30-35% of employees. So they got this money back here, And up here, and because of a restaurant in a rural area, what we then did was to say under the employee retention credit, video, you can see how to link to it below. But had they did that, then that credit goes from March, I believe it's March 13th through December 31st. And they could get a $5,000 per employee credit on the first $10,000 in wages paid. So what we looked at is now that because they were shut down, they could, it was curbside. Mm-hmm. So the thing about it is we were running those numbers. Well, whenever you have 60 employees and a lot of them are working part-time, the problem with it, and your payroll goes to a third, your number of employees working each week goes to a third. The amount after they have to, we're working approximately how much they're going to have to pay back, they would have been better to do an ERC. But because everybody was after this money and this, what we started this video about, the rush, we got to get it now. It's going to be gone. And it did go. But there's going to be people that would have been more beneficial with the credit, not with the loan. So so the point there is if you haven't applied yet, please check with your tax professional, because again, the bankers were not trained in that area. Mm-hmm. So there's this misnomer out there. This is my option. It wasn't. It was not. There was another option. And for companies shut down, because in this 8-week period, if I'm shut down or I'm doing curbside partly open, I'm spending this money. And then let's say the law changes and they say, oh, well, you can have an extension on it. People are an unknown trying to run a business in an unknown. It's unknown what the final outcome is going to be, and we're playing the game is a better way to say it. And yet with COVID-19 here, it's called, that in of itself is an unknown. So look into the future. Which is better, 8 weeks with a debt forgiveness, or was the employee retention credit for a period of up to 3 quarters?
Yeah, because 75% of the money that's forgiven from the PPP has to be spent on payroll. So if somebody's, closed or doing curbside or something like that, it's going to be hard for them to spend 75% of that money. So they need to check with their accountant and see what might be better.
And there's actually, again, I see a lot of people that are not spending. The other thing, for example, a client, I'm trying to remember, I think it was Tuesday, had a client in that they have contracts and they're running full tilt. They're essential. What they do as a service is essential to hospitals, essential to the military. So they ran full tilt. But in the middle of this, one of the locations they did work for shut down. So the contract stopped. In doing so, all of a sudden, they had 20 employees not working. Someone went to get different jobs, someone, on unemployment. But the point of it is when I saw that early on in this 8-week period, we were way back up here. Whenever it happened, within about week 4 of the 8 weeks, that happened. And I ran some rough numbers and I said, you need to set aside about $125,000 of the monies you received, because you're probably going to have to pay it back. Mm-hmm. And they could declare bonuses for the other people or whatever, but their FTEs, a full-time equivalent, would end up still being in the area of 20 shy. So, and they employ about 100 people. They were thinking they just got to spend the money, So you're right, it's spending the money right. And that's what we're going to do in step 2, is really drill down on how to spend the money. In step 2, we're going to take a look at what do I need to do? And again, this last week, especially at our office, has been nothing but appointments on, did I spend it right? And have I spent it right? Do I have the right number of employees? What's my options before it's over?
Wrapping it up, is there anything we missed out on?
No, I think it's important for everybody to, if that they're confused by the full-time equivalents, that we're going to cover that in part 3, because I know we've thrown that out there a couple times.
We've thrown that out. We've thrown definitions out. Definitions will be in part 3. So again, please subscribe. I think the other thing is tell other people about it. Spread the word. This is important because, again, no matter where you're at in these 4 steps, they're all interdependent, and we want to get the maximum debt forgiveness that we can. And that's our role. That's our purpose. So subscribe. Hope this helps. And I really enjoy this kind of back and forth. I like this a lot better than those. I'm talking to people over here. Yay.